Hey, what's up, everybody? This is Polio Jr. And yeah, it's been a while since I've done one of these sit downs, and I actually just made a longer version of what I call the three S's of investing. And this video, I'm going to make it as short as possible just so you have the idea and you can figure out where to go from there. And so before I do start, obviously, I am promoting to the best of my ability the Team Human merchandise. So this is the current uh, comfort tee that we have. And there's for free shipping, just put in the promo code Paul, and you'll get free shipping on any item. Doesn't matter what it is, but it actually came out really, really good, and I feel like it's very self-explanatory. If you're a human, if you are a human being, I'm on your team, and that's it. So I don't have anything else to say about that. But going back to the three S's, all that stands for, to keep it very simple, is stocks, silver, savings. That's it. That is all that I personally really need to know about as far as even short term and long term investing goes. Our goal is to do at least 1 year of the three S's. So, maybe minimum 6 months to see how you're doing. Stocks, silver, savings. It's that simple. And all you really want to do, this is what I do personally, is I have a reminder in my phone for either a Thursday or a Friday, so once a week, is I will go buy X amount of silver, typically physical silver. Has to be 0.999 fine silver, one troy ounce. It doesn't have to be any kind of special numismatic silver, which means that it has currency value. You just need the spot price of the silver. That's it. It's that simple. Um, and then after that are stocks. Now, I've really gotten into buying partial shares of stocks, of super expensive stocks, because obviously I don't have enough a lot of times at one time to buy an entire share of Amazon, which is approaching $4,000 a share, approaching. So it will hit that, no question. And then, you know, another one buying partial shares is Google, which is approaching $2,000 a share, approaching. And another one would be Apple. So, and right now, all we're doing is looking at Amazon. And the nice thing about this is you don't have to know too much. All you have to know is that their stock price right now, as of August 28th, is $3,400, and it does not have a ceiling as far as what I can see. That means it will continually go up. So even if you do not have the money to buy one share of Amazon, you can use a stock trading app like Robinhood, um, like um, like Stash and like Webull, where you can buy partial shares by $50 at a time, and that's just what I do in Robinhood. Like $50 at a time, maybe $100 at a time, and I just continually do that every single week. I do the same thing with Google. Now, they obviously do not have a dividend. Neither of these have a dividend of any kind. So the only thing we're going by is what the stock price is actually worth. What's the price of one share, and will that continue to go up? And there are a million reasons why Amazon and Google will keep going up. So I see Amazon hitting 10,000 eventually, and I see Google hitting $5,000 a share eventually. So buying partial shares, I believe, is a good idea. It's been a good idea so far. Another stock is Apple, buying partial shares of Apple. So to make this extremely short, Apple is $500 a share, which is crazy because I remember buying it at under $200 a share. Now, on August 31st, they're splitting their shares. That means that if you own one share of Apple, you will, on August 31st, own four shares of Apple. Now, what that also means is that the stock price of Apple is going to go down to approximately $125 a share, making it easier for people, um, with less money to purchase, to get in on the investing action. And that's what Apple wants. So, um, Apple is again is a company that I see with no ceiling. They may not move as fast as Amazon, they may not move as fast as Google, but they are moving very fast. So I'm trying to do this until before my eyes start to shut. And they also offer a small dividend. A dividend is where you get a percentage of what you have invested in the company. Um, you get paid a percentage of what you have invested back to you. So Apple does that. It's very low, but it's better than nothing. So the last good one that I've always liked is AG&C. AG&C, uh, stays relatively steady. Their stock price doesn't move too much, but their dividend, now at least on Robinhood, it says that it is 12%. So even if it were 10.25%, that's crazy. That means for every $100 that you would have invested, you would get $10.25 for free, just for investing in the company. That's it. So, and I like auto reinvesting back into the company, and that's something that Robinhood does as well. Okay, stay open. So, we talked about silver. Uh, the silver prices have been going up a lot recently. And if we go um, to 1 year silver, 6 months silver, all that high, 30-day silver, it's at 29.14. And that was this August. It's been a long time since it's hit over 29, I believe. So, yeah, we are right there. So it's been the highest in 5 years, and and precious metals are going up with the stock market, which typically does not happen anyway. Um, you want physical silver. You want to be able to hold it in your hand. You want a commodity in case something does happen to the dollar or to the stock market. You have some sort of backup plan, or you make some money and you can go sell it at any coin shop in the area. If you do go to buy some, expect to pay at least $4 to $5 over spot. So if it's $26, expect to pay $30 to $31 per ounce, of just regular silver. Ooh, okay. And then the rest is savings. Now, Barclays has been around forever. I've had them forever. It seems like the new customers right now, their APY is 0.60, which is amazing. It says 5 times the national average. I personally think it's closer to 10 times the national average. Now, all APYs are down right now. It's not just Barclays. So you will see down the line again, their APY slowly going back up. So We want to have our money do something. We don't want to just have it sit in our checking account and not do anything. At the very least, we want it in a savings account accruing some kind of interest. That's when we don't know what to do with our money. We put it in our savings account. So, yeah. Okay. So let's stop the share. All right. Let's go back. I apologize. I'm extremely tired. It's almost 2 o'clock in the morning. Three S's: stocks, silver, savings. So that means roughly once a week, you set a day in your calendar. I usually do in my Google Calendar. I go to the coin shop. I purchase a couple ounces of silver a week. And luckily, I built a relationship with this person where um, I can get some good deals now. Again, with the savings account, I recommend putting a certain amount away. I won't even say how much, it's up to you, but a certain amount away into your savings so your money isn't just stagnating in your checking account. And right now, their savings account is higher than their CD accounts and they're higher than everybody else's CD accounts anyway. So there's no fees. Um, there's no minimum deposit, that kind of stuff. So you can transfer as much as you want, pretty much, and then the rest are stocks. The fastest way to make money, obviously, you have to spend a little bit more money to make a little bit more money, and then that's where I recommend. I'll share one last time. I recommend these couple stocks. Obviously, Amazon, because it does not have a ceiling. It is not going to dip. It's not going to drop anymore. It's just going to continually go up. This online business is worldwide. So watch it hit and just keep buying partial shares if you cannot afford a total share. The same thing goes for Google. So close that. So same thing goes for Google. Yes, they might be down very slightly today. Almost 1% is nothing to Google, is nothing to Amazon, is nothing. All that's going to happen is that they lose a percent and then they gain a couple percent. They lose a percent, they gain a couple other percent. And that's just how it's been going for a long, long time now. So especially uh, with with both, but especially with Google because Google's been doing a lot more for a long time. So whereas Amazon didn't really start getting really popular until roughly 10 years ago, Google's been popular for about 20 years now. So anyway, I would just keep buying partial shares of Google as well, and just watch that watch that stock price just keep going and going and going. Watch it hit 5 grand because I guarantee you that it will. I guarantee that Amazon will hit 10 grand as well. The next thing is Apple. I highly suggest you start investing in Apple, whether it be partial shares. On August 31st is when their shares will go down to approximately $125 a share. So when that happens, or even before that happens, I would buy a decent amount of Apple because there's going to be a lot of people coming out of the woodworks to buy inexpensive or less expensive Apple shares. So they won't be $500 anymore. They will be closer to 125. Yeah. So, and they offer a dividend. So they give you a percentage of what you own in the company back to you, which is really cool. And Warren Buffett owns over $2 billion worth of Apple stock, which is pretty amazing. The last stock I suggest you look at has a 0% sell rate, and that is AGNC. AGNC, the stock price doesn't move too much, but every month you do make a dividend percentage. You do get something back from the dividends. So the dividends are worth closer to 12%. Um, so that's like I said, that is like having a savings account that's giving you 12%, which is absurd, which is crazy. So, and I highly recommend just reinvesting it into the company. Don't keep it. Don't try and buy other stocks with it. Just keep, just keep the money. Let it reinvest. So, yeah, going to the coin shop, buying silver at least once a week, if not every other week. Buy at least 2 ounces of just generic silver, nothing crazy. And if they charge you over $5 an ounce per spot, then I wouldn't do business with those people anymore. So, and yeah, that's simple. So, and then the next one is obviously having this is an online savings account. I only use it when I need to transfer money the to the savings account. It's very rare that I do need to transfer money back to my checking account. So, oh my God, eyes stay open. Okay, so all right, stop the share. That's it. The three S's: stocks, silver, savings. It's that easy. Um, check out the Team Human merchandise. I'm going to get some rest now. So that's all I have. Remember, the three S's. Try and do it once a week if you can. If you can't, try every other week. So, and then watch over a period between 6 months to a year of how much your entire portfolio begins to grow. So, but all right, guys, that's all I have, and yeah, time for me to hit the hay. So, my eyes are saying goodbye, everybody. Thanks for listening to me rant as I fall asleep recording. So maybe I'll do another video when I'm a little more awake. But yeah, that's it. Three S's: stocks, silver, savings. That's it. Keep it simple. Keep it super simple. All right. That's all I have. I love you guys. I'll see you in the next one. Goodbye.